Hey everybody, welcome to week 56 of the Ag Commodity Corner Plus podcast. And Mo, what are we talking about today? It's the 1st of May 2026.
Yeah, this is podcast number 56.
That's right.
And today we are 14 days. I'm excited. I don't know if you are, but 14 days to the TrumpXi meeting in Beijing. Phase 2 trade deal. What do you think? Maybe Trump has that in his back pocket? We've been bullish on this meeting for some time, since October of last year. So far, we haven't gotten what we wanted, but we're getting close. And just provide your comments on the YouTube channel. Is it bullish ag or not? I know a lot of our other competitors and experts, and they've called this wrong so far. They've been too bearish. And a lot of people think that, or calling for this meeting to be canceled or rescheduled, but looks like it's on. So that's why we're talking about it, because I think it's very, very important.
Should we start with the market summary?
Oh, yes, sir. Sorry. Okay, market summary, quote chart. A lot of green, a lot of yellow. We've had this on our podcast for some time now. And corn actually closed at new contract highs, new closing weekly contract highs. That's important. Dailies are important, but weeklies are more important. Soybeans, same thing. We've actually traded above 12 again. Soy oil, new closing contract highs. Canola as well, breaking above that 750 resistance. Chicago wheat also closed weekly higher, although off the high. Same thing with Kansas City. We'll talk about that. Minneapolis cotton, just defying gravity, up again. New closing contract highs, both for old crop, July, and new crop. Live cattle, new closing record highs. Feeders came shy, but see this number here, this 379.45. That would have been a new record closing high if we could have closed there. Hogs are weak. I'm not talking about hogs in this podcast, so I'm going to mention it, but pseudo rabies was found in Iowa. It's another disease. We've got vaccinations and all that fun stuff, so we can control it. I think temporarily it's bearish. That's why hogs retested the lows. But it could remove some supply out of the system, so long-term it's bullish. But, we'd be buying the hogs down here ahead of the grilling season. S&P, NASDAQ to new all-time record highs. Unbelievable how strong the stock market is despite this raging war in Iran. Crude oil, new closing weekly highs. We'll briefly talk about that as well and the impact it's having, as well as fertilizer prices. So let's get into it.
Let's start with that much anticipated US-China, or rather TrumpXi summit. Ahead of the summit, US Treasury Secretary acknowledged that he held talks with China's vice premier to discuss the upcoming trip to China. He said he looks forward to a productive summit in Beijing, but also warned the vice premier that the country's provocative regulations have negative impact on the world's supply chains. Trump today said he expects this upcoming trip to China to be great. And, he's scheduled to meet Xi on during their summit from the 14th and 15th of May. And the plan is to discuss trade, discuss the war in Iran, and also regional security. This is a summit that's been delayed a couple of times more.
Yeah, so why not? Let's make China great again. And here's my theory. The war rages on, so some were thinking that, okay, well, maybe he's going to reschedule again or kick the can down the road. But what if he takes a trip to China, and along the way, either before or after the meeting, we sign a deal with Iran and we end this war? Wouldn't that be a win? Both these leaders need a win. We've talked about this for some time now, and I think that's what's going to happen. And to be honest with you, I'm probably the only one that's bullish on this, but I think they're going to expand those commitment purchases across ag, and I think prices could be that much higher. So let's see what happens.
Let's switch and look at the wheat futures, and this one's July. Kansas City wheat futures for HRW wheat, and we have a technical breakout in the nearby contract, and the breakout happened at 660. No.
Yeah, see, look at this chart. This is your rounded bottom that goes for a long time, and then you got your ceiling 660. That old ceiling becomes your new support, and this is bullish wheat. As over the next 30 to 60 days, it's also bullish for the ag markets as well.
Yes, like you said, Mo, the wheat's doing a lot of the leading as far as ag is concerned and grains are concerned. On the canola chart as well, a breakout from the recent trading range and also past recent highs as well, Mo.
Yeah, so you've got this ceiling here at 750. Again, that's your old ceiling, new support. And I think this thing has to go higher. We have to ration demand. And then once again, bullish for canola.
And as far as U.S. HRW wheat country is concerned, 69% of the wheat region is in drought as of the latest update from the U.S. Drought Monitor. Some rains in the forecast, but is it too little, too late, Mo? And what do you think this will do to those yields and the development?
Yeah, so this is a forecast for next Wednesday. There is some rain scheduled for that HRW country, highlighted in red. It's too late. We're going into the reproductive stage. Maybe it stops some of the bleeding, but it's not going to increase the yield. And the problem with futures is the funds are trying to figure out what the production loss is. They know that it's bad, but they have no clue what that production loss is. And do you wait for the USDA to tell you? I'm not waiting. I think the USDA has no clue. They don't have the staff. They don't have the data. So just be careful.
And also looking into May, the forecast, there's some rain early on in the forecast for May, like you said, but unlikely to be a lot of rain for those HRW wheat regions. But some rain is better than none. In the Midwest, during the next 2 weeks, it'll be more infrequent rain and light enough to allow good planting progress. We also had a few frost and freeze news coming through this week.
Yeah, so that frost freeze could hit HRW country again as far south as Nebraska. This is a weather forecast for the month of May. So you can see here, this is your dry area. It's a big chunk. And then you can see the wet areas, but the wet areas are also cool, particularly up here into the Great Lakes. It literally stays cold through May 17th. I'm just wondering whether that changes or not, but it's not an ideal start for both Western Canada and Ontario and for some parts of the Midwest. In fact, some parts of those Midwest areas were flooded, so you could see some replanting moving forward.
Let's look at the start of the show as far as this week's action is concerned. This is the June S&P 500 stock index. We had a period more towards the second half of last year and early this year when stocks weren't doing much, but the S&P 500 is up by about 14% in just the month of April, new record highs, and the old saying, maybe we should be saying sell in June rather than sell in May and go away.
Yeah, I mean, this is Liberation Day down here. Should have been buying, and this is the start of the Iran war. Both cases, they were both a buying opportunity, and it was bullish for the stock market. So in this chart, it just shows you that the S&P 500 in May has been up 12 out of the past 13 years. So much for that old saying. I mean, we need to switch it to something. I don't know if it's June or what it is, but it's been an amazing run, to say the least. That's why we tell our members that you need to stay invested for the long game, not the short game. Remember, we're here for a good time and a long time. If you're here for a long time, you're going to need a lot of money. So stay invested for the long time. Don't forget to try our program, join our club. This past week, we were telling our members, we were keeping them in the game. Remember, this is a game of poker. Do you hold or fold? Too many of you are folding and folding hard. You're pulling the trigger too hard. Stop pulling that trigger. This market, both the stock market and the ag commodities, the grain markets, are really strong. We've warned you that we thought the funds would buy the dips, defend their positions, and go record long. We'll talk about that here in a second. Top 10 reasons to remain bullish canola and wheat over the next 30 to 60 days. Try the program.
Well, there's headline news that Trump is not happy with the second response from Iran, the first one as well. He had said that he was not happy with their ceasefire, or rather peace deal responses. As far as the second response is concerned, he told Congress that hostilities in Iran have terminated since he imposed a 2-week ceasefire on April the 7th, which was extended. Trump's blockade of Iranian ports has seen Iran's oil exports collapsing by 90%, and supposedly they're running out of storage and will need to shut down their oil wells, which is impacting their economy more.
Iran wants to remove the nuclear discussion to another time and place. Trump saying no. And so I think this was the smartest strategy he could have used to date by blocking those ports. And I think we could have a deal, like I said, by mid-May. If he's traveling to China, maybe he stops and says hello to Iran and say, let's do a deal. And this is from Kalshi, which is a betting platform, and they're still betting that crude hasn't hit their highs. We'll see. Again, it really depends on, it's up to Trump. If he decides that maybe the deal's good enough and he wants to end it, then he's slowly pulling out, by the way. Like he pulled out one of the ships from the Middle East. I think he's reducing some of the military presence. So we'll see.
And as a result of all the war that's going on in the Middle East, UAE, which is a significant member of the OPEC, UAE said it will exit OPEC on, today, May the 1st. UAE was the third largest producer in OPEC behind Saudi and Iraq. The shock announcement comes after the UAE was the target of missiles and drone attacks for weeks by fellow member Iran. And they have been part of the OPEC since 1967. And once the war is over, it is reported that they want to max out their oil production. While when they were under OPEC, they were not allowed because of the quotas. So long term, this could be bearish crude oil because it could mean that more crude is coming online.
Yeah, and OPEC actually has a meeting on Sunday. And they're actually thinking of increasing production again by over 200,000 barrels ex-UAE. So, again, remember, OPEC was trying to win market share away from the U.S. before this war started. Now UAE's out. They're going to have to continue to maintain that market share. It's going to be tough, but I think long-term, bearish crude oil. And this is the headline news about OPEC looking to hike output on Sunday.
Let's talk about the much-awaited Farm Bill. The U.S. House of Representatives passed its version of a 5-year Farm Bill after stripping a provision opposed by the Make America Healthy Again movement that would have blocked some lawsuits against pesticide makers. But as part of the Farm Bill, E15 was not included in the vote. but it is expected to show up again on May 13th as a separate standalone bill more.
Yeah, I forgot to include a chart, but I was going to include a chart that showed that E15 or ethanol is so much cheaper versus gasoline. And if there's ever a time for the U.S. to finally pass E15 all year round, it's now. I know the U.S. oil lobby has a lot of money and a lot of pull versus ethanol, but I hope by maybe middle of May. They're saying somewhere around May 13th, could be before that, but maybe we'll finally get that passed.
Looking at the month of April, among the commodities, no points for guessing, but the big winners were the energies and cotton. So gasoline came in as the biggest winner, up by about 18.3%. Crude oil up by about 14.8%. Cotton up 14%, whereas the worst performing commodities were U.S. natural gas, off by about 8% during the month, followed by sugar, minus 6.8%, palm oil, minus 5.3%, and for the year to date, again, no points for guessing, energies among the leaders, or heating oil up by about 92.36%, crude oil 82.9%, soy oil up by about 58.9% more.
Yeah, we're not surprised. Natural gas, one of the big losers. That's what natural gas does this time of the year, as the heat returns. But and a lot of the ags were as part of the gainers for last month, so that's good news. It was a strong month for the Bloomberg Ag Index, plus the sub index. The Ag sub index is still dragging their feet a little bit compared to the Bloomberg Commodity Index, but overall, it's been a good start to 2026.
And following on from bullishness in grains, today we had the release of the latest CFTC weekly net managed money position report. And as you guys can see, a lot of buying in the grains, especially corn, up by about a whopping almost 80,000 contracts week on week to take that net length to 264K. And wheat as well, buying in Chicago wheat up by about 21,000, taking that to net long 10,000.
Now remember, this includes all of the grains and livestock. Let's move on to this chart, because we've been forecasting that the funds would go record long. Guess what? We are record long. And this is a delayed report. And so the estimate shows funds. This is grains, oilseeds, and canola. I apologize, we don't include cotton, but in our next podcast, we'll include cotton, because if you include cotton, funds are long over 927,000 contracts. As of right now, without cotton, they're long, record long, 888, is it?
888.
Yep, 1,000 contracts. In real time, we think the funds, after this week's buying spree, they're long over 1 million contracts. Members, you know what we think they're going to be long by the end of Q2. So, folks, thanks for watching.
Thanks, guys.
Appreciate it. Have a great weekend. If you're going to start to plant some of the corn and beans, or maybe you've already started, make it safe. Take care.
Bye, guys.